All right, so get this. You're staring at a bunch of stocks, and you have to pick just one to invest in. What do you do? Do you just go with the one company name you recognize?
Well, that sounds a little crazy, doesn't it?
It does, right? But that's exactly what we're going to be looking at today with this research paper called Can Ignorance Beat the Stock Market?
Now, that's a very interesting premise.
It really is. I mean, we're always told that you got to analyze the market, you got to study those complex financial models, and really understand these companies to make those smart investment choices.
Yeah.
But this research suggests that maybe all you really need is just a little recognition.
That's right. The recognition heuristic, they call it. And it's so simple. You're looking at a list of stocks. You only recognize one company. Well, that's the one you pick.
So how did they test this idea?
Well, they surveyed hundreds of people, both in Germany and in the United States.
Okay.
And they asked them to identify companies they recognize from stock listings.
Got it.
They included, regular people like you and me, and also seasoned financial experts.
Oh, so they had people in Germany looking at both German and American companies and vice versa for the folks in the U.S.
Exactly. So they wanted to see how this recognition played out across different countries and levels of financial knowledge.
So they used this recognition data to actually build investment portfolios.
They did. They created portfolios that were based on companies recognized by participants within their own country, what they called domestic recognition, and then portfolios based on companies recognized from a foreign stock exchange, what they called international recognition.
Okay, so they built these portfolios just on name recognition. What happened next?
Well, they tracked the performance of these portfolios over 6 months
Okay.
and compared them to those major market indices like the Dow Jones and DAX,
Mhm.
and even, professionally managed mutual funds.
So did it actually work? Did this recognition thing actually pan out?
The results were pretty surprising, I have to say. The portfolios that were built using the recognition heuristic actually consistently outperformed those based on unrecognized companies.
Really?
And get this, in many cases, they actually beat the market indices and those fancy mutual funds.
Wait, so you're telling me that just picking companies that I've heard of could potentially make me more money than, like, Wall Street hotshots?
It's certainly a thought-provoking idea, isn't it?
Yeah, it's pretty big. So why would recognizing a company be linked to its success in the market?
Well, think about the companies that you recognize. They're often the ones that have that larger market share, strong brands, and maybe even a reputation for being, really good at what they do.
Yeah, the ones that come to mind are the ones that you see everywhere, the ones everyone's talking about.
Exactly. And that widespread recognition might actually be a signal, even if it's subconscious, of the company's underlying strength and potential for growth, even for those professional investors.
So it's not just random chance. There could be a real link between recognizing a company and factors that actually drive its success.
That's what the research is indicating.
Yeah.
And it raises those interesting questions about, how we make decisions, not just in the stock market, but in lots of areas of life as well. Welcome back to our deep dive.
So last time we were talking about how this recognition heuristic, just picking companies you recognize, actually beat out some pretty complex investment strategies.
Yeah, and we just started to unpack why that might be. Let's look at some more of the specific findings from the research.
Okay.
For example, they looked at how this heuristic performed across those different countries.
Right. They had people in both Germany and the U.S. choosing companies just based on whether they recognize the name. What they find, was there like a home field advantage?
It was actually the opposite.
Really?
Yeah, in all 4 of their international tests, portfolios built from recognizing foreign companies actually outperformed those built from recognizing companies in one's own country.
So you're telling me if I'm in the U.S., I might do better picking German companies that I recognize than American ones?
It's what the data suggests, yeah. It seems that the greater the distance from the market, the better the recognition heuristic works.
Okay, explain that to me. Why would being less familiar with a market actually make this strategy more effective?
Well, think about it. When you're looking at your own domestic market, you're just bombarded with news, analysis, all these opinions, you name it, all this information.
Oh, yeah, absolutely. Every day there's some new hot stock tip or a warning about, some company's impending doom. It's hard to know what to believe.
Exactly. All that noise can really cloud your judgment, even if you think you're being really rational and objective.
It's like trying to have a conversation in a really loud room. It's hard to hear anything over all the chatter.
Yeah, perfect analogy. Now, when you look at a foreign market, you just don't have all that background noise. You're kind of forced to rely on that much simpler metric, which is, do I recognize this company?
So you filter out all the static and distractions
Yeah.
and are left with a clearer signal. I like that.
And that signal, that recognition, might actually be tapping into something really fundamental about a company's strength.
Okay.
Remember, we talked about how the companies you recognize are often the ones with a bigger market presence, a really well-established brand.
Right. They're the ones that have cut through all the clutter.
Exactly. And this kind of brings us to another interesting finding. The study also compared portfolios that were built from the recognition of regular people, like us, versus those built by financial experts.
Okay. I'm really interested to hear this. Did all that expertise give the pros an edge?
You might be surprised to hear this. In several cases, the portfolios that were based on the recognition of everyday people actually outperformed those based on expert recognition.
No way. So the folks with less financial knowledge actually made better investment choices. How is that even possible?
Well, it all kind of goes back to that idea of beneficial ignorance that we were talking about. It seems like experts, even with all of their knowledge, might actually be more susceptible to certain biases.
You'd think all that training would help them avoid those pitfalls, wouldn't you?
You would think so, right? But maybe all that information overload actually works against them. They might overthink things or get lost in the weeds, or maybe even be swayed by prevailing market sentiment.
So they're too busy looking at the trees to see the whole forest.
Yeah, exactly. And meanwhile, regular people, they don't have all that baggage. They're just going with their gut feeling, which in this case is based on recognition.
So maybe sometimes the best approach is just to trust your instincts.
It's a powerful takeaway, yeah. Of
Yeah.
course, this is just one study. And, we need more research to really fully understand this phenomenon.
Right. We're not saying everybody should go out and start buying stocks just based on name recognition.
Of course not.
But it does offer a new perspective on how we make decisions, especially in a complex, uncertain environment like the stock market.
Yeah, it's a good reminder that, sometimes simplicity can be more effective than complexity. And those intuitive judgments, even the ones based on something as seemingly superficial as recognition, can actually be surprisingly insightful.
So where do we go from here? What are the next steps?
Well, for one, we need more research to see how these findings hold up in different market conditions.
Right. This study focused on a bull market. What happens in a bear market?
Exactly. It's also important to explore the psychological mechanisms that are behind the recognition heuristic. What is it about recognizing something that triggers a sense of trust or confidence?
That's a really great question. And how do factors like brand familiarity and media exposure play into all this?
Those are all important avenues for future research, yeah. And, these findings could have implications not just for investing, but for decision making in other areas too, from, consumer choices to political preferences.
It feels like we're just scratching the surface of a whole new way of thinking about knowledge, intuition, and how we make sense of the world around us.
And on that note, I think we'll pause our deep dive here and give you, our listeners, a chance to kind of absorb these ideas.
We'll be back with the final part of our episode where we'll wrap up our discussion and leave you with some final insights and questions to ponder. Welcome back, everyone. We've been on this journey exploring how ignorance could be a secret weapon in the stock market.
It really has challenged a lot of our ideas about what it takes to be a smart investor.
All right, before we finish up, let's do a quick recap for our listeners.
Okay, so first, this research suggests that a simple approach, like just choosing companies you recognize, can be surprisingly effective. It might even beat those more complex data-driven approaches.
So sometimes the best solution is the simplest. You don't always have to overthink things.
Exactly, keep it simple. And, that brings us to our second takeaway, that potential power of what we've been calling beneficial ignorance.
Ah, yes, that idea that sometimes not being weighed down by too much information or expert opinions can actually help you make a clearer decision.
Right. And it's not about being uninformed. It's more about recognizing that, even knowledge has its limitations. Be open to different ways of understanding the world.
So what does all this mean for our listeners who are, trying to figure out this world of investing? Should we toss out our spreadsheets and just pick stocks based on what we recognize?
Well, hold on a second. While this research is interesting, it's super important to remember that investing always involves risk, and there's no foolproof method.
Definitely. This isn't about some get-rich-quick scheme.
Right.
The market changes all the time. What works in one market might not work in another.
And, this particular study looked at a bull market, which might have favored those bigger, well-known companies. So it would be interesting to see what happens in a bear market.
So it's always important to do your homework. Understand your own risk tolerance and definitely diversify your portfolio. Don't put all your eggs in one basket, even if it's a basket of really familiar names.
That's right. But I think the real value of this research is the new way of thinking it gives us. It encourages us to, really think about where we get our information, to question those expert opinions, and to even consider the wisdom of the crowd.
Even if it's just everyday people.
Exactly. Even if they don't have a, super deep understanding of finance.
It's a reminder that sometimes our intuition, even when it's based on something as basic as recognition, can be pretty insightful.
Yeah, it really can. And it brings up some fascinating questions like, what is it about recognizing something that makes us feel like we can trust it? How does our mind take in all this information and then form those gut feelings?
Those are questions that go way beyond investing.
They really do. I mean, we're talking fundamental stuff about human psychology and decision making.
So to wrap up our deep dive, we'll leave you with this question. Could your own ignorance be a valuable source of insight?
The next time you need to make a tough decision about investing, your career, whatever it is, think about the power of simplicity, your intuition, and yeah, even a little ignorance.
Trust your gut, question everything, and don't be afraid to challenge what everyone else is saying. You never know what you might find.
And learning is a journey, it's not a destination.
That's right.
There's always something new to learn, a different perspective to consider, and we can gain wisdom from some pretty unexpected places.
Thanks for joining us on our deep dive. Until next time, keep exploring, keep asking those tough questions, and stay open to new possibilities.